You ever asked yourself, what is an escrow account and what is it used for? That's the question that I'm going to answer in today's video because there seems to be a lot of confusion about what an escrow account is, why it's actually used, and when it should be needed. And so I want to address what it is and address some common myths about having an escrow account. And we're just going to jump right in. So if you don't know me, I'm Channing. I'm the owner of Bayou Mortgage, and I love working with first-time home buyers, and that includes answering so many of the questions that we often get asked. And so what we're going to talk about today is what is an escrow account. And so in simple terms, an escrow account is kind of like a savings account. And so an escrow account is an account that's managed by your lender that holds money for your property taxes and your insurance every year. And the reason why it exists is to ensure that those things get paid for, right? And so one of the things that the lender will often do, especially if you don't put a certain percentage down or if you don't use a certain loan program, like some lenders may allow you to waive an escrow account, and we'll talk more about that. But for most, they're going to require an escrow account because they want to make sure that the property taxes and the insurance are getting paid each year. And so that escrow account is simply like a savings account. And if you waive the escrow account, like some lenders will allow you to do that, then you have to go and make those payments in full every year, right? So you have to save up the annual insurance premium, you have to save up your annual property taxes and make those payments in full. What the lender is doing is they're charging you on a monthly basis to build up that account to make that payment on the yearly basis. And so your mortgage payment is really broken down like this. And so you have your principal and interest, right? We've talked about this numerous times on the channel. You have your principal and interest, which is the amount that you're paying back for the mortgage itself. And so that's the loan amount times the interest rate, or factored in with the interest rate. That's the loan amount factored by the interest rate, and that's your monthly principal and interest. That never goes up, it never changes, it never adjusts unless you refinance once you're locked in. However, the other part, because we call it PITI, taxes and insurance due, right? So your insurance is annual, 9 times out of 10. Your property taxes are annual. So that means they can adjust annually, that they can adjust each year. And so if your mortgage payment ever does increase, it's not going to increase because the lender changed your rate. It's not going to increase because the lender is making you pay more for the loan. It's going to increase because either your property taxes or your insurance have increased. And the same would be true if they went down. And so the lender will ask for an escrow cushion. So typically when you close on your home, you're going to put in maybe 2 months or 3 months of cushion. So if your insurance is $150 a month, they may ask for 3 months plus the annual to keep a cushion in that account. And what the lender is trying to accomplish by doing that is to help you not have to increase your payment if the payment adjusts, small. If it's a small incremental adjustment at the end of the year, they don't want to increase your payment, because what happens is not only do you have to up the premium to pay the new payment, you have to catch up and cover the shortage. And so the cushion is really designed to try to help cover any shortage that may exist. Now, what are some of the benefits of an escrow account, right? An escrow account means that you don't have to make a lump sum payment at the end of the year. Now, some of you are financially savvy enough and disciplined enough that you would save that money every month so that it would be available at the end of the year, but others of you maybe not. And so one of the biggest benefits is that it doesn't force you to make the lump sum payment at the end of every year. And I'm in Louisiana, South Louisiana at that, where insurance is often one of the biggest expenses, right? It can be $3,000, $4,000, $5,000 per year that a person would need to save to make those payments. And so by paying it in the monthly payment each month, you're not having to do that. You're not having to, put that expense on yourself. And it creates some predictability in your expenses because you're making the same monthly payment each and every month. And what that does is it gives you the peace of mind of not risking lapsing, right? So you could lapse your insurance. Now the policy isn't available. We see that a lot here in South Louisiana where, and I'm sure it happens in California and Texas and anywhere where there's high risk, right? Where maybe you have a company and they've given you a good policy, but they're no longer writing in that area. And if your policy lapses, then you can't get that policy back. And so that's a benefit. Another benefit is not having back taxes, right? So the government can sue you. They can put your property up for sale, right? All because of back taxes. And the other thing is that it gives the lender those same protections. And so it's one of the reasons why it's often mandated, because they don't want to be in a situation where they're having to pay your back taxes and then they've got to foreclose on the house simply because of past due taxes. And so this is a way around that. Now let's talk about some of the downsides of having an escrow account, things to watch out for. You need to watch your insurance every year, and you need to check your property tax bill, right? Those are going to be published before they're due. So like your property tax bill, you can actually log on typically to your tax assessor's website and view what those assessments are going to be. The same with your insurance. Now your insurance is going to renew every year around the time that you bought your house, and your property taxes typically in most places are going to renew in December. And so the one thing you want to do is make sure you're checking your insurance policy every year, see if it's increasing, and then that gives you an opportunity to go shop it, and then hopefully either find the same or maybe even better premium so that your payment doesn't go up. And so that is one of the downsides, though, is that obviously if the policy goes up, your mortgage payment's going to go up. But it's not to say that you would pay any extra money, because the reality is you would have still had to pay that money at the end of the year, even if you didn't have an escrow account. I think sometimes we just don't understand why those things are happening. And so that creates kind of some of the confusion. And another thing, if you're a first-time home buyer, let's address that I get asked, and this is really the reason for the video or what prompted it, is people will ask, well, why do I have to pay 12 months of insurance up front and pay it in my monthly payment? Well, the answer is quite simple. So the first year that you live in that house, you haven't been making payments each month. And since it's a savings account, you basically have a zero balance in your escrow account. So your insurance is going to be due in 12 months, but you will not have or your insurance is actually due at closing, and you haven't made enough payments to make that payment for the first year. That's why you're bringing the first year's payment up front. And then you're still paying monthly because the insurance is going to be due again in year 2, which means from, I'm filming this in August. If you closed in August, from August to August, you've now been making those monthly payments. And so now you have enough to cover year 2, assuming no increases or anything like that. And so that's one of the more confusing areas with an escrow account. So I just wanted to throw that in there. Let's answer the question now, like, should you have an escrow account? And I think for most people, it is the smartest decision, right? Especially if you're a first-time home buyer, or if you know you're not the best at saving money or being consistent with that. This is for savings. So number one, the lender's probably going to make you do it. But even if you have the option to waive it, for most people, it's going to make the most sense. Now, experienced buyers, and here's where it really makes a difference, is if you're doing a refinance, you may choose to waive the escrow. And one of the reasons why you may choose to do that is because it's going to reduce your overall closing costs, because we still have to collect that same year of insurance and that same amount of not past due, but that property taxes that will be due. So if you're refinancing, sometimes people will choose to save by not having an escrow account, and it can cut off $3,000, $4,000, $5,000 of the closing cost for that refinance. You just have to be wise enough to make those payments at the end of the year. However, for most people, having an escrow account makes the most sense. And typically, most lenders, unless you're putting 10 to 20% down, they're not even going to allow you to waive that escrow. Of course, there's exceptions to every rule. Some lenders do, most do not. And so escrow is not a fee. Let's recap. Escrow is not a fee. It's not a charge. It's simply a savings account that the lender sets up on your behalf with a little cushion to help make sure that your property taxes and your insurance are getting paid. Hey, listen, if you have any questions, if you're a first-time home buyer or even a second-time home buyer, and you just don't feel like your questions are getting answered and you want to know, can I purchase a home? Can I refinance? Whatever it is, you can always go to workwithchanning.com. It's in the description. Set up a call with me, and I'm happy to answer any and all questions that you have. Currently, I'm only licensed in Louisiana, but I will still answer your questions to the best of my ability as we expand out into other states. So thanks so much for checking out the video, and I'll talk to you next time.